So today, we're going to be going over tax extensions and why they can be incredibly helpful for cannabis businesses. Filing a tax extension gives individuals, owners, operators, partners, and investors the ability to file their taxes after the April tax deadline, giving you more time to get your taxes and paperwork in order. The topics we'll cover today include benefits of filing a tax extension for cannabis businesses, the biggest misconception about tax extensions, things to keep in mind when filing a tax extension, when should cannabis businesses file an extension and the approximate cost of filing, and helpful recommendations for filing a tax extension. So let's jump in. The information contained in this presentation is meant for guidance purposes only, and not as professional legal or tax advice. Further, it does not give personalized legal, tax, investment, or any business advice in general. There are some benefits for filing an extension, the main one being that you now have an additional 6 months after the April tax deadline to get paperwork and taxes in order. This will push back your business or individual filing date until about mid-October. Another benefit is protecting your business from penalties and interest. As long as you pay your tax liability or approximated liability by the deadline, filing an extension will protect you from incurring additional penalties. A huge reason why more time for retrieving and organizing forms is so beneficial is because of the Schedule K-1 or Form 1065. K-1 is a necessary tax form that reports each cannabis business's partner investor's income, gain or loss in the business. Unfortunately, the K-1 has a reputation around the country for arriving late. Here are a couple reasons why this might be the case. Number 1, it's a lot of paperwork. And number 2, the K-1 can require multiple entries on a taxpayer's federal return. It is common you won't receive your K-1 paperwork in time, so filing an extension gives you more time to gather your K-1 and any other delayed documentation so you can file your taxes accurately. The biggest misconception about tax extensions is that filing an extension gives individuals and/or businesses an extension on when they have to pay their total tax liability. This is not the case. Filing an extension purely gives you an extension on when you have to file your taxes. Businesses and individuals alike still need to pay their tax liability by the April deadline to avoid incurring penalties and interest on their taxes owed. Therefore, if you file a tax extension but do not pay your state or federal taxes until sometime after the April tax deadline, you will incur penalties and interest on your delayed tax payments. So, what if you aren't exactly sure how much you owe? If you need help approximating, here are some percentages that may help guide your tax computation. Number 1, take 90% of your current year tax liability. Or number 2, simply use and pay 100% of your prior year's tax liability. We know a lot can change in the industry and in your business from tax year to tax year. So we strongly advise working with our cannabis CPAs at GreenGrowth to help put together the most accurate computation for you or your business. Keep in mind that you cannot retroactively file a tax extension. Even if it's only a day or two after, state governments and the IRS do not allow individuals and businesses to file tax extensions after the April deadline. Your extension must be filled out correctly and submitted before the original deadline to be valid. The earliest you can file an extension is in January. For example, for 2021 taxes, you can file an extension as early as January of 2022 and as late as the last day of the April deadline. There are no apparent benefits in filing an extension as early as possible versus at the last possible minute. So what is the cost of filing? Another advantage of tax extensions is that the paperwork costs nothing to file and can be filed digitally with the state or the IRS. If you do go through an accountant, they may charge a nominal service fee to file the extension for you and/or for your tax computation. Always pay your taxes on time. Regardless of whether you have the ballpark numbers or exact figures of your state or federal tax liability, avoid the interest and penalties by getting your payments in before the deadline. Also calculate your approximate tax liability. It's generally always better to take an educated guess and pay on time than to be late. So we strongly advise working with our cannabis CPAs at GreenGrowth to help you put together the most accurate tax computation for you or your business. So is filing a tax extension a bad thing? Taxes and regulations constantly fluctuate in the cannabis industry, which is why in many cases, it's actually better for cannabis operators to file extensions and wait to prepare their taxes until the extension date. This is especially true if you're aware that state or federal tax regulations will change sometime between the tax deadline and the extension date. Remember, most CPAs don't specialize in cannabis accounting. Using your hometown CPA for your personal taxes may be suitable for now, but for your cannabis business, we highly recommend you consult and work with accountants who specialize in the industry. Filing a tax extension for cannabis businesses is a common practice and something that we often recommend to our clients in the industry. So if you need assistance with tax preparation, tax planning, or tax computation services, then contact us today at greengrowthcpas.com. Thank you so much for your time. We hope this information has been helpful. If you have any questions or want more information, please leave us a comment below. And be sure to like this video and give us a follow to learn more about the cannabis industry.